Hey guys, Clinton Sistrunk, Colorado Mortgage Team. Okay, today I just want to talk to you about shopping your loan. So first and foremost, you should shop every single lender. You should get quotes from at least 3 different mortgage companies and compare what they're doing. But there's a right way to do it and a wrong way to do it. And today we're going to tell you how to effectively shop so it doesn't cost you money. Now, when's the wrong time to shop lenders? Well, the wrong time to shop lenders is when you're out there putting contracts on a house and you go under contract. When you go under contract on a house, you should have already nailed down the lender you're going to use. And the reason why is because you have to start making important decisions that financially affect your transaction at that point. Paying for an appraisal, getting a home inspection, or we're going to keep the house, locking your interest rate. I'll just tell you a quick little story. We just had a non-farm payroll report come out, and we had a client that was pre-approved. We've been working with them for like a year and a half, and they went under contract a few days before, and we said, okay, and we explained to them where the market was, what the risk was, and that, we would probably lock their rate. And they said, well, you know what, we've been shopping, and we have this other lender that's 0.25% lower. And we said, oh, okay, no problem. Well, give us the locked LE, and we'll make sure we beat that lender because we're going to take care of you. Now, how can we say that? Well, we can say that because there's many ways that we can approach a transaction. But the danger there is once we lock in a transaction, we can't make any adjustments. Our hands are tied. So we said, let's see what the other lender has, and we will make sure we take care of you. Come to find out, they weren't locked with that other lender. They just got a free fee worksheet and a lie-to-me rate from that other lender because they gave them a quote that was below market and that had no cost or credit associated with it, which very rarely happens. And then the non-farm payroll came out, and we locked every one of our loans but them because we were waiting to make sure that we beat that lender and that we took care of them and they could stay with us. Well, they lost $7,000 on their loan overnight because the interest rate spiked just like we thought they would. And come to find out, they never locked with that other lender. The other lender couldn't give them a real rate. They shopped at the wrong time instead of having a trusted partner picked out, and it cost them dearly. I don't want to see that happen to you. The time to shop your lender is up front, when you're getting pre-approved, when you're interviewing different lenders, when you're talking to them. And it's not about who just quotes you the absolute lowest rate at that point in time. Because at any given time, one lender can beat the other lender. There's lots of ways to do it. You can flip from what's called lender paid to borrower paid. Let's dive into that real quick. Because when we said, hey, we'll beat that other lender, you just give us the locked LE. You let them lock your loan and we'll make sure we beat it. How can we say that? Well, we can say that because our income is in the interest rate in a transaction. We're very transparent. And let's say our income's 1%, just to make the numbers easy. We're making 1%, it's in the rate, there's no cost to the client, it's just the rate we're delivering. And that's called lender paid. But if we need to switch it, we can do something called borrower paid. And what's borrower paid? That's where we take that 1% out of the rate, buying that rate down even lower in the marketplace, and we charge our comp directly to you on line 801 on the CD as an origination charge. And so we could charge 1 point origination. That would deliver a much lower rate to the client. Maybe they don't want to pay that 1% as a cost on the transaction. Well, you could take the rate up slightly to get a 0.5% credit and offset some of that 1% charge, but still deliver a lower rate. The flexibility is there, but if you don't know what you're up against, you don't know how to structure it. We told the client we would take care of them, but they shopped at the wrong time and it cost them a lot of money. And that breaks my heart. And I don't want to see that happen to you. We're very transparent. We'll tell you exactly what we're willing to do. Obviously, we don't work for free. We got to feed our family. But I can tell you that 99% of the time, because we have such a low cost structure to begin with in the rate, that we beat everybody else. And what happened was that other lender could never deliver the rate they promised. They could never lock that. They weren't actually lower than us. When it came down to it, they were substantially higher. So they had the best deal on the table and they lost it because they shopped at the wrong time. But I don't want you to do that. So you're going to shop your loan up front when you're getting pre-approved. And you're looking for a lender that you can trust, somebody that's honest, somebody that's going to share with you all the information so you're educated and knowledgeable and can make the right choice for your family and not get taken advantage of by people that are not telling you all the facts and not giving you all the information, that are just trying to suck you in. You know, another thing they were told that until they turned in all their docs and had a full file, they couldn't lock their interest rate. And that's not true either. You can lock an interest rate with a property under contract and a simple 1003 completed, which is the loan application in our business. No documents turned in at all. Now, it's preferable to have your documents and to be able to know that you qualify and that kind of thing. But this lender, again, wasn't honest with them. They gave them false information and pushed them out. And that really just hurts my soul. You know, I'm passionate about this business, and I hate to see that happen to people, especially people I care about, the people that I'm working with. So what I'm going to tell you, always shop your lender. Always get 3 quotes. Absolutely get 3 quotes. I say the same thing in the insurance world and everything else that you're going to do with contractors. If you're getting bids, always get 3. 3 is the magic number. And I want to be one of those 3. And if I'm one of the 3 that gets to quote your mortgage loan, I'm going to win it 99% of the time. Why? Because we aim to win. We take care of our clients. We're not greedy. We have a very low comp plan so that we can deliver the best rate into the marketplace that we possibly can and still feed our families. And at the end of the day, we're independent mortgage brokers. We spank the credit unions, we spank the banks, we spank the mortgage lenders, and our only competition is other brokers like us, and we got that beat too. So I hope I get a chance to compete for your business. Put your information in below. Let me show you how good of a deal we can give you.